Okay, welcome to another video. This is a chart of Bitcoin. All right, now what do you see here on this chart? Take a minute to think about what you're looking at in terms of my labeling of this chart. Okay, complete 5-wave move. That's what I see. Finished, no more. Okay, before I dive into the stock market analysis, which is going to just highlight a little bit about why I see this as being the correct count. Number one, these waves are moving up in threes. Okay, wave one here being a 3-wave move. Nothing else I see there apart from a 3-wave move. Now, whether or not this is the complete 3-wave move or whether or not this is partially the 3-wave move, since the beginning of Bitcoin, I believe this is a complete 3-wave move, right? Then we have a sharp wave 2, we have a wave 3. Okay, the first portion of the zigzag was sharper than the last part, the C wave, right? A, B, C. We had a little bit more of a complex wave 4, right? So then we had another zigzag for wave 5. Okay, now if you draw the channel from the end of wave 2 to the end of wave 4, you can see quite clearly that there's a lot of weakness in wave 5. Okay, and also C wave a bit longer than wave A in that regard, like this. Okay, that's fine, that's normal, no problem. So what makes you think that I know anything about this pattern and why would I come to this conclusion, right? Well, the reason is because if you take a look at the stock market, we are at the end of a very large bubble cycle, right? Now, to illustrate this point, I need to bring up this chart. Okay, so this is the European stock market joined onto the US stock market since 1500s, right? The 1500s. Now, where did the tulip mania happen? If you're interested in that at all, well, it definitely happened around the 1600s, and you can see that something started to shift around that time, which in my opinion meant that there was also another mania around that time due to most likely cheap money, low interest rates, whatever you want to call it, inflated money supply, whatever. Now, today I'm talking waves. So it's all about the waves. In terms of market analysis, this is the end of wave 3. We had a 3-3-5-3-5 scenario for wave 4. Now, obviously I don't have chart data that goes before this. If you have some, please leave a link down below as to where I could find such chart data, but more than likely this would have been a wave that would have gone up for probably quite a long time. Anyway, so the point is that once we hit the end of wave 4, we're looking at wave 5. Now, wave 5 consists of what would normally be classified, if you're an Elliottian, as a ending diagonal, right? But an ending diagonal consists of 3 waves up that are zigzags, right? Wave 2 has Arias waves in them. Wave 4 has Arias waves in them. Now, if you want to learn Arias wave, I suggest you go to my website and do so, ariaswave.com. If you find that it's too expensive for you, that's fine. I'm in the process of writing a book that has all of the details, all of the guidelines as to how I read the markets, and have always done so since I discovered the pattern. And this is my 8th, almost 9th year of producing Arias wave content, a way of deciphering exactly what's going on in the markets. Anyway, that said, wave 1 of wave 5 is a zigzag. Wave 2 is a short, sharp correction with the Arias wave set of waves included inside. Wave 3 is a zigzag. Within the B wave of the zigzag, you have all of the included Arias wave corrective patterns, right? So what I'm trying to tell you here is that the corrective patterns only occur in the B wave of a zigzag in waves 2 and 4, right? So in the case of a zigzag, and especially in the case of an ending diagonal, which I call a type 1 weak 5 wave move, you have multiple zigzags going on, which produce multiple different patterns, which can definitely appear to be very complex in nature, right? So wave 1 is zigzag, wave 2 short sharp Arias wave correction, wave 3 is a zigzag with the Arias wave correction within wave B. Wave 4 with the Great Depression has, once again, the whole set of corrective Arias wave patterns within there in a sharp manner for wave 4. So what is the last pattern that we're looking at now? It is an extended type 2 zigzag pattern. Okay, so picture this first zigzag in wave 1. Picture if you stretch that out, what would that look like? Well, it'd look like wave 3. Stretch that out even more, what would that look like? Well, wave 5. Okay, it's the same thing but stretched out. That's all it is, right? Now, as we all know, the Fed was created in 1913. So therefore, well, more ability to manipulate the market. But given that human psychology, social mood does include the majority of people on the planet, the patterns still evolve in the same manner as they always do. So therefore, what I must say to you is that wave 5, since the Great Depression, is a type 2 expanded zigzag, right? Wave 1 is a regular zigzag. Wave 3 is more or less, it could be a type 1 zigzag, expanded zigzag, but definitely wave 5 is a type 2 expanded zigzag, right? Now, if you don't understand what that means, that's okay. We're going to get to it eventually. You're going to learn about this. Okay, so let's go back to this chart. Well, not quite this chart. Let's go to the DJI chart, which is the same chart I was just showing you since the Great Depression, except labeled in very fine detail. Okay, let's go to the monthly chart. Okay, so here at the top of 1929, we have the end of wave 3, the zigzag, right, which more than likely is a type 2, but it could be a type 1 depending on where wave B ended. And that's something that RAS wave teaches you. In my opinion, it's more than likely a type 2, but not as bad as this type 2 that we're seeing since the Great Depression all the way up until now. Okay, so how do I dissect this? How do I pull this apart? Well, number one, we had a wave A, the first move up. The one that apparently Robert Prechter said, this is a 5-wave move. Wrong. That is incorrect. And the reason why it's incorrect is because there are so many waves that prove that is wrong. And I don't want to say nothing bad about him, because he's an amazing person, wrote an amazing book, The Socioeconomic Book of Finance. Great read. Enjoyed it quite thoroughly, multiple times. But the point is here that wave A happened, and then we had the beginning of the B wave, right? So this blue line indicates the length of the B wave. The B wave of this zigzag was extremely expanded to the upside. Why? A lot of intervention. We had the Fed controlling the money supply. By the way, the Fed is not owned by the government. It's a private entity, right? So if you get a bunch of rich people who want to take control of the monetary system, right? They form basically like an alliance and created the Federal Reserve Bank, central bank. Now they're all over the world, and they get to dictate how money is produced, created, distributed, whatever, right? They even control a lot of the media, which also incentivizes people to do things by the way of programming, mental programming, okay? So that's not financial advice, by the way. I'm not a financial advisor. This is just my opinion. Now, in order to understand this move here, we had, number one, we had wave A, as you can see there. Then we had A, and then we had an expanded B wave. So we started with the first A, and then we had a B, a C, right? And that was just the B wave of the B wave. So B wave within a B wave expanded. Now this move here, the C wave, 5-wave move. 5-wave move is never a correction. Why is that 5-wave move there? Quite simply put, this is part of an expanded B wave which went all the way to the year 2000, or around that time. Okay, so if you take a look at my markings, you can see, and I'll just get rid of the last couple because they might interfere with what you're looking at, right? You have an A, then you have a B, and then you have a C. So that movement that happened, you know, during 9/11, the Y2K, etc., that was a C wave, right? And it's a type 2 weak 5-wave move, right? And then we had a D wave, and then you finally had an E wave, and that marked the end of wave B. This is a stretched out zigzag. Now, this move should not have gone this far for a C wave to end this move, but you can see how weak this move is compared to other moves that have happened previously. Why is that? Well, there's a bunch of reasons. Namely, interest rates have been lowered to the point where they've been trying to stimulate the economy. With so many people now, the population since that time has grown exponentially, right? Exponentially. If you have a look at the world population, wow, just get a lot of people to get loans and you still can't even produce a real impulsive 5-wave move to end this pattern, which is a type 2 expanded zigzag, right? So therefore, you get this. You get a move that's also a type 2 weak 5-wave move, or the ending diagonal, right? And this move, I believe, has finished now. It is over. This is the end. Well, what's going to happen? Okay, well, typically when you hit 5 waves, what tends to happen to price action? It doesn't matter if you're an Elliottian or you look into Arias wave. Price action will fall to the previous 4th wave, which is the red line, right? Now, does it surprise you at all that it would fall back down this far when this whole move was never meant to happen in the first place? It only ever happened because of all that stimulus and money expansion, getting rid of the gold standard. It's no surprise that this move will eventually go down, all the way back down 99%, all right? The Great Depression fell down 90%. This is going to be 99%, okay? Now, this is all based on Arias wave. It's very logical when you look at it from the perspective of complete technical wave analysis that is more precise than Elliott wave or any other wave methodology that you'll ever find. Okay. So in saying that, let's go back. Let's just go to the weekly chart for a moment. Okay, let's just cap this off for this video because there's many more to come. As I said to you, I've been away for a while, but that's because I've been thinking exactly about how I'm going to deliver this content, and you're seeing it right now. So, when was Bitcoin created or launched, right? It launched around 2008. What do we have here? We have the end of a massive mania cycle bubble in the stock market. Cheap credit, lots of money sloshing around, everybody's happy, everybody's got their house prices going up. I'm not going to touch too much on the 10-year bond yields at the moment because that's going to open up another can of worms, which I don't have time on this video. I don't want to make this go forever. But since that time, we've had an ending pattern. Wave 1, 2, 3, 4, 5. This is the end. Okay? We're going to see a turn down shortly. YouTube videos that I produce now will give you the bigger picture. Trading view videos that I produce after I am done giving you the long-term YouTube series are going to be put on Trading View, and then I'm going to distribute this stuff everywhere. TikTok, Instagram, you name it. I've got a team on it. It's going to happen. Why? Because once this happens, you're going to understand how valuable this is, and believe me, you will understand how valuable it is. Everything that I put on a chart these days has meaning behind it, and this is part of what's going on here. So why would Bitcoin crash to zero? Why would it? Well, you've got to understand that the whole system is built on a house of cards. It's built on complete stimulus, complete money printing. Sentiment will collapse, social mood will collapse. We're starting to see all the signs: war, pandemics. What else are they going to throw at it, right? There's just not much more they can do to keep this thing going. They've tried every trick in the book. It's going to end, and it's going to go off with a bang. Now, I'm not going to talk about what's going to happen after this. This is something that is beyond the scope of this video. But for now, please try to absorb this kind of information, because there is a hell of a lot more coming, because I've been doing this for quite a while now, and it's basically all I think about. So yeah, I'll leave you on that. and please leave a comment if I enable them. I should enable them. And yeah, try to absorb this type of scenario, because this here is not a 5-wave move. The Great Depression wasn't a 5-wave move. There is a lot more going on within those waves, and those waves are the key to figuring out what comes next. I hope you enjoyed this video, and I'll catch you on the next one.